My name is Keeran Gwilliam-Beeharee and I'm the Director for Market Access at Vigeo Eiris. In this video, we're going to go through the importance of ESG disclosures, but quickly before I do, I just wanted to do a few words about Vigeo Eiris. So we are a global provider of environmental, social and governance solutions for both the investor and issuer communities. We've been in the ESG assessment space for over 30 years now, and have around 300 people working for us in our operations worldwide. In terms of our products and services, we provide corporate ratings, ratings on sovereigns, but also second-party opinions for bonds and for loans, and alongside that provide data research, benchmarks and analytics services as well. Let's talk about ESG coming to the fore. So certainly over the last decade, it's become much more of a factor, a pressing factor for both investors, but also corporates as well. That's been driven by a number of factors. Part of it has been the materialization of a number of risks that were once considered to be emerging. Climate change is one example, physical and transition risk in particular. But if we think about 2020 and the impacts of the COVID-19 pandemic, we can really see how social risk has materialized at a corporate level, at a sovereign level, and for individuals as well. Now, as well as the risk side of things, we've also seen a rise in terms of sustainable finance with the bond and loan markets rising year on year for quite some time now in terms of the volume and number of issuances. And then since 2015 and the push of the Sustainable Development Goals and the Paris Agreement, again, those have been major factors that have mobilized at a global level investor and corporate activity. Now that has translated into a progressive global shift in terms of the assets under management in sustainable funds and focused on sustainable instruments. And alongside that, we've also seen continual growth in terms of the number of UN PRI, Principle for Responsible Investment signatories, year on year. And I've had here some figures from 2019. So what does this mean in terms of ESG disclosures? Well, really it means that they've moved from being a nice to have to a must have for both corporates and for investors as well. So investors, they really see them as a tool to provide insight on the company's ability to identify, to manage and measure performance when it comes to ESG risks. They also demonstrate the company has the capacity to frame its purpose in a way that moves beyond profit. And then also ESG is also a fantastic indicator of how well a company has built its relations with all of the stakeholders impacted by its operations. So it's a great marker, if you like, in terms of the health of the social license to operate. Now for corporates, ESG disclosures are also important in terms of their own risk management. ESG disclosure is a process through which companies can view different risks through different lenses. ESG is also a tool by which they can gain access to the sustainable finance markets and raise capital if necessary for various projects. In many jurisdictions, ESG disclosures are now becoming a matter of compliance, a matter of regulation, and that is certainly a trend to watch for the future. And then finally, ESG continues to be central to brand and reputational health for many companies worldwide.